What's up, guys? Welcome to Roensch Capital Charts. Today we're taking a look at the ever so popular S&P 500 ETF SPY, ticker symbol SPY, on a variety of time frames in anticipation of the next trading day, Wednesday, May 1st. All right, guys, well, SPY here today finished the day down $8.08 a share. That's minus 1.58% in regular trading hours. It is down almost another dollar or so here in the after hours. Of course, we had some earnings here after the bell. A few things going on here contributing to that. Of course, we had AMD report, and their forecast for the current quarter was simply in line, which the street didn't really like. That's also dragging down Nvidia, of course, a large market cap company. And then Starbucks is also down relatively substantially. They slashed their 2024 forecast. Now, one more thing to touch on before we dive into the daily analysis here. Specific to SPY, or really the market in general, okay, we have quite a bit of news here tomorrow. We're getting the US ADP employment change at 8:15 a.m. Eastern Time. At 9:45 a.m. Eastern Time, we're getting the US S&P Manufacturing PMI final. At 10 a.m. Eastern Time, it's US JOLTS job openings. At the same time, 10 a.m. Eastern Time, we get US ISM Manufacturing PMI. And then at 2 p.m. Eastern Time, it's FOMC, the interest rate decision. And then at 2:30, it's the FOMC press conference with Chair Powell. As far as earnings, we have MasterCard and Pfizer in the morning. So listen, tomorrow's a pretty big news day. So of course, it's not uncommon to see some skittish behavior heading into the close out of the overall market when we're heading into a day like tomorrow. But let's take a look here. Let's pull out all the bias that the market was willing to give us today. We'll do a quick analysis of the volume profile. I'll explain everything. We'll take a look at the psychological levels, and then we'll finish out here with the expected move and the directional bias coming out of the chain. All right, let's start here with a quick little volume analysis on the 5-minute chart. You know, by the way, if you're new here, guys, SPY is a daily upload. It's the first video I upload every day. So I appreciate if you subscribe to the channel, and I'll keep the SPY videos coming. So here on the 5-minute, guys, really what we're doing is we're peeling back the onion, right? We're looking under the hood. I want to look at the volume profile as a separate entity compared to the price action and see, was there underlying bias that we can't get just by looking at the price action? Because the price action's done, it's over with. But it's obvious, we can see what happened, but we can look under the hood and get more information. So what I'm primarily interested in here today, I want to look at these little dump offs that we got, right? Like there, into the close. If we look at the actual profile, you can see here the open, kind of normal, right? Normal open, at least if you take this out contextually speaking, relatively normal open. Now here, we started to see an increase in volume on the dump. And then as soon as the stock began consolidating again, the volume decreased quickly. That is a small amount of bearish bias there in the morning. Here on this dump off then, we also saw elevated volume on 3 consecutive red bars, and then it kind of faded as the stock began to consolidate again. That is a little bit more, again, a small amount, but a little bit more there of bearish bias. And then heading into the close, we saw, you know, like if we compare this to, you can see we got a lot of volume heading into the close, but you have to consider we were heading into some big earnings after the bell, and then also tomorrow. So we're likely, you know, it's not unheard of to see a lot of volume in the close on a day like today heading into a day like tomorrow. But we saw volume start to ramp up. The shape of the ramp up is very contextual. It's just the size of it puts the open to shame. Now, listen, guys, on this fade that we got into the close, the volume was so high that is bearish bias that supports the move in the price action, right? If we look at it as separate entities, we get a supporting bias in the volume profile. However, on SPY, we have to understand that it's very normal to see one of, if not the highest volume bars of the day is almost always going to be the bar right before the close. That's different from blue chips. Blue chips, it's usually the bar after the close because that's when the institutions rebalance. On SPY, for whatever reason, funds and institutions tend to trigger their rebalancing algorithms before the bell. Whereas on the blue chips, the individual names, we tend to see that on the first candle after the bell. So this volume being very high, it's not out of the ordinary. However, the sheer size of the volume, again, if we compare that to yesterday here, it is bigger than is typical, but we expect that heading into a day like tomorrow. However, this volume bar being so high, it is contextual due to the rebalancing. But if we compare it to the actual bars, those are pretty substantial red bars, so we also have to assign a little bit of bearish bias there. Now, let's move on here to the psychological, the self-fulfilling prophecy levels that a lot of funds, institutions, traders, and I think, you guys will and should be paying attention to here come tomorrow. Now, yesterday we held above the 50 period moving average here on the 30-minute chart, and of course the 200 period by default. Today, we faded beneath there, especially in pre-market this morning. We got a retest the 50 period here on the 30-minute, a heavily watched moving average on a heavily watched time frame, right? And we rejected hard. Came down for a test of 2 of the 200 period, and we went down through that, retested it, and faded. Okay, so we gave up both of those here today. We currently find ourselves now, according to the after hours price, about 1.1% away from the 200 and about 1.2% away from the 50 period. Now, keep in mind, anything over 1% on SPY is a more volatile day. Of course, today we minus 1.58%. Today was certainly a more volatile day, but anything over plus or minus 1 is a larger day for SPY. Okay, it's a little more common on the Qs, right, the NASDAQ. For the S&P, it's a little bit less common, but we're certainly seeing them more often than normal as of late. So, a reclaim of that 200 period and the 50 period, that is like best case scenario, at least on the 30-minute in particular. Just understand that that would be another slightly higher volatility day. But bulls, that would be the goal, right? It's to reclaim ideally both of these. It wouldn't surprise me to see the 50 period cross over into tomorrow as it gets dragged down more quickly than the 200 period, right? So we might be testing the 50 period first if we get an upside move in the ETF. But getting back above both of those would really be ideal, and ideally doing so on high volume, getting a low volume retest of whichever one is higher at the time, right? And then boom, bouncing off that higher moving average at the time on higher volume. Okay, small sample size betting on the breakback downside, higher sample size agreeing with the bounce. That's really what we're looking for. Now, here on the 4-hour chart, let's take a look. We can see here we gave up that 50 period on the 4-hour as well here today. And that did occur during the intraday session. So listen, bears, let's start with you guys here. Any retest of the 50 period, you guys are going to want to see a hard rejection, ideally on as much volume as possible here on the 4-hour in particular. Whereas bulls, your ideal scenario come tomorrow, according to the after hours price, we're about a little less than 0.5% away. That's well within reason. Bulls are reclaiming that 50 period here on the 4-hour, closing above it, getting above it as early in the day as possible so that a lot of volume can come in, agreeing with that break and hold. That's really what I'm looking for from a bullish perspective here tomorrow, whereas again, you bears just want to see a rejection off that on as much volume as possible. Again, volume today was pretty high compared to the average. Now, let's take a look at the daily here. The daily is going to be the most contextual and I think the most important chart on SPY, especially right now. You can see here we were talking yesterday when we went over SPY that we were right in line. We were testing the 50-day moving average, which is a huge test. Of course, today we kind of bounced and gapped a little lower and fell from there. So now we currently find ourselves, because that's above 510, we currently find ourselves about 1.84% away, about 1.8, 1.9% away from that 50-day moving average. That would be quite a volatile day on SPY. Okay, but really, guys, the more immediate level that I'm paying very close attention to on both sides of the ball, bulls and bears, is $500 a share, right? Because we closed at 501.98. Now, again, this is the daily chart. It's not going to show after hours. That's okay. But listen, bulls, $500 a share is a huge psychological and therefore technical level that I would want to see hold from a bullish perspective as clean as possible. Ideally, I don't want to give up $500 a share. Okay, whereas bears, you have to think, what's the quickest way to try to discourage some of the short-term bulls? Giving up $500 a share. So bears, your ideal scenario here come tomorrow is going to be a break downside through 5, and then ideally in the same day, I'm a confirmation guy. I like to see that confirmation. So a high volume downside break through 5, low volume retest to 5, and then high volume rejection, reclaiming 5 all in one day as a shorter term resistance level. Okay, bulls, you don't want to see that happen. Really, any volume on the retest is cool with me, as long as we see a high volume bounce away from 5, showing that a big sample size agrees that 5 needs to be held as a support level here tomorrow. Implied volatility here on SPY compared to the last few months. Again, it's sitting in, it depends on what time frame you're comparing to. Again, you should always be comparing to your intended trade time frame. So if you're comparing to the last like 2 weeks, it's a little lower. However, if you're comparing to any longer than that, compared to the last few months, you are sitting in still the slightly higher range compared to that longer time frame. And again, IV needs to be considered, especially when you're positioning yourself using options, right? That lower IV conditioning or conditions, those lower IV conditions are going to be more favorable for those looking to purchase contracts to appreciate, right? And those higher IV conditions are going to be more favorable for those looking to farm out premium, right? Sell options, looking for a downside return to equilibrium in IV, get a little IV crush, which is good when you're short options. I don't mean buying puts, that would be short the stock using options, right? When you're short actual options, selling them out, selling to open, right? Looking to benefit from the depreciation in the contracts. Now, we have a big advantage on SPY with expected moves. So let's take a look here. The next expiration that we have on SPY is, of course, tomorrow, because we get daily expirations. That's a big advantage on SPY that we don't get on other stocks. Okay, we look here. The expected move by tomorrow's closing price compared to today's closing price is plus or minus $4.51 per share. Okay, that's the expected move from that 501.98 by tomorrow's closing price. That is quite literally the one standard deviation expected move that the options traders, all of them together, big sample size, are pricing into the contracts. That gets pulled from implied volatility. Again, guys, by design, expected move does not have directional bias. That's the volatility expectation, which is a big piece of the puzzle, especially when trading options, right? So the directional bias, that has to come from doing the analysis. You know, we'll get to the options directional bias here in a second. But then the volatility bias is the other, side of that puzzle when really trying to effectively position ourselves using options. So if you disagree with that expected move, that's actually a good thing. You can use that to position yourself potentially. If you fully agree with the market in terms of volatility expectation, it can be a little bit more difficult to position yourself to profit. So last thing here, let's take a look at the directional bias coming out of the options traders here today. We had 7.9 million total contracts today. It's a good sample size. 3.58 million of those were calls and 4.36 million were puts. So on the overall call put ratio, we are actually seeing a bearish bias heading into tomorrow. And the 0 to 20 delta range, those are those short-term speculators, which I like to look at here because these videos are primarily geared toward the following day. So out of the short-term speculators, we're getting about 1.28 million calls and about 1.68 million puts. So a bearish bias as well out of the short-term speculators. Listen, if you guys are getting value out of these daily SPY videos, I ask one thing, takes half a second, it's 100% free. Just leave a like on the video and then get out of here. I appreciate it, and I'll see you in the next one.